Hey, welcome. It's the Crypto Sniper coming at you. Yes, how you guys been doing? Crypto is doing what it's doing, and some of you are wondering, well, what's happening next right now? We've certainly had some overperformance from Solana relative to the rest of the crypto market. We've had some pretty decent strength from Bitcoin. Where is it right now? What happens next? That's the question many of you are asking. Let's also go straight to an area we touched on before, that on a much bigger time frame we were suggesting eventually was going to top out. That was BTC dominance. That's right, BTC dominance. Now some of you will be thinking before we go to that chart, well, hold on a minute, Francis, didn't you in those videos say that BTC dominance is actually going to reduce? Yes, we're giving you and gave you in those previous videos a macro call saying that in fact the digital gold, the BTC dominance is going to start reducing on the long run. In fact, we inverted that chart, if you remember, and we pointed to it very much bottoming out after a long falling wedge. We'll show you that again if you like. And we said there might be one more dip to the downside. Remember, downside, it was an inverted chart, actually means to the upside on the normal chart. There might be that one more dip to the downside, as you often get in a falling wedge, where you have a final capitulation, whoop, out the bottom, and then you, because of the squeezy, you then get the pop up in the opposite direction. This would be indicative of a lot of alts then running at a faster rate, gaining new market cap, the overall crypto pot growing quicker in the other slices of the pizza that are not Bitcoin. To eventually, and we made it clear that it's not something we expect to have happen in this cycle. It's maybe not even in the next cycle, but broadly and eventually the structure will probably, I would say potentially by the end of the alt run of the following cycle, could see Bitcoin fall, in fact, below 20% as overall dominance, yet still go very high. This kind of clashes with the guys that have been, I think Robert Kiyosaki threw out a $10 million Bitcoin. That's pretty bullish, especially as he said gold would maybe go to 15,000. I do see the potential for gold to do 15,000, which is about a well, we're at about 2.5 now, so it's not even it's about a 6x. But to go to, we're not even 100 grand on Bitcoin, to go to 10 million, that's about 1,000x if you were at 100 grand. So that's quite a difference in overall gearing, 1,000 times up in market cap on Bitcoin. Now, our problem with that prediction is our Bitcoin dominance technicals don't support that. In fact, the actual scaling up is going to happen in all the statist activities of tokens that are going to do different things apart from digital gold. And that is what we would imagine, where all the development apps based, all the various prove your identity, all the various log your property on the blockchain, etc., etc. So the apps that are coming with real functionality are going to end up, the things that do things apart from sit and supposedly hold their worth, which Bitcoin's still pretty high beta, but not as high beta as the rest because of its bigger market cap, which largely Bitcoin appears to be in the role thereof. In short, it's not the fastest transactional, it's not, most of the other things. There's things that are newer, faster, and quicker. And this was the big thing. Everybody said Gen 1 is the end all for this. They all bought into it. Generation 1. It's a bit like you have the iPhone 15 Pro Max and I have the iPhone 1, the original. And we're having a features and compatibility issue on the 5G network, and we see which one performs better. I think it's kind of obvious that the one made for the generation with the tech and all the tools for today is going to be outperforming overall the iPhone 1. We don't go, this is the phone, this is the Apple product, everything else is just a bad copy. Yes, they are copies, but they're faster, more efficient copies. So let's go to that Bitcoin dominance chart and deal with that aspect of why is it going up? And it is. And where will it go? So here's the chart. Brilliant. This is quite clearly on a less than a daily chart. So we are now zoomed in on Bitcoin dominance, and we're having a look on a shorter time frame. Now, we've been actually watching the structure for quite a while. We wondered, will it be up? Will it be down? Our overall conclusion is that we potentially getting an upside. That was confirmed when this move started to happen, and you bounced off the mid-level line, and then you started to creep. You had the break and feign back in, a known tendency. By the way, it also tested the capping descending grind line of the HVF after diddling on the line and the level, which was around 55.4, and had a little runaway return move. Once it had its return move, up she went, and that has been Bitcoin dominant. So actually Bitcoin has been doing pretty well since, and even before, our video released. In that video where we said long-term Bitcoin dominance goes to 20%. Remember the difference in time frames, and remember that we warned you there could be a final flurry. It might not even be the absolute final, there might be a little bit more, but overall on the bigger time frames, we feel that this is eventually going to be tapping out. Maxis will not agree. You can see kind of a little bit more broadening after we've run our first interim, but overall, where will this pattern structure by its technical upside HVF, Hunt Volatility Funnel Method draw, likely run the next level of Bitcoin dominance? Well, in actual fact, we see it going 58.5. You see 58.45, never stops exactly there. You could even see a 59, God forbid, maybe even a spike on through 60 potentially on a low-ish 8-hour time frame pattern. Remember when we were looking at that dominance structure, we were looking at it on a far bigger time frame and saying, where does the future lie, looking this cycle and into the end of the following cycle, a bigger time frame. So you can be bullish something on a short time frame, but macro bearish it, and you can be bearish something on a short time frame, but macro bullish it. So miners might be an example. I would say gold miners, not Bitcoin miners. Miners might be an example on that front, where long term they can still, I expect them to go up or be seized by government, for example, but in the short term they can soften and continue to soften and are underperformers until that changes. Okay, so that's an example of time frame analysis. What time frame? Are you bullish or bearish is not a question. On what time frame? Generally, if someone asks me without specifying a time frame, I even ask what time frame, or I provide the macro time frame, not what I think will happen in the next 15 minutes, next hour, or even next day or week. In other words, where will it be same time next year, higher or lower? Okay, so having gone through all that explanationally, this is still a reasonable move up in dominance, and it probably points to, there's a couple of ways dominance goes up, by the way, just sidebar alert. That doesn't mean it's necessarily good for all crypto. For example, if we get up to, and it's going to be a good moment soon to pivot to the actual Bitcoin dollar chart in a minute, because we are coming up to a key technical level for us where we've already seen some activity. So the updates in our community, still no trading metamorphosis programs available, I'm afraid, guys. Just the self-study, much lower price point, by the way. You will get an opportunity potentially to update in your 6-month period. And we give priority to those that are already in the system, but we are restricting numbers. We've had a good run, and we want everybody to have a great experience. So listen to this. Bitcoin USDT, where is it? Take it from the dominance back to the chart that you all know. We will come back to dominance for that bigger time frame view, but we're jumping around a little bit. I'm going to leave the 8-hour and go out to the daily and expand the chart a little bit. Here's where we are. So we were talking inside the community. Let's take our gray box off there, and saying what comes actually next. And overall, while we started the bullish up move after touching here, we said it's quite feasible, let's try that again, feasible that we revisit the capping descending grind line that is a broadening structure. We spoke about this when we spoke about it's comparable with gold on a bigger time frame. Gold in 2021 made a high there, and it took quite some time before it broke to make a new high. Happened this year, and that's once, twice, 3 times a lady. In other words, it came up and was rejected 3 times, and on the 4th time it properly broke. Now Bitcoin's done that to a degree, but in a slightly different way. In other words, Bitcoin tests something often pulls back and then has enough momentum to try and test again. So you get these double tests. I kind of like it like fox's ears, as I sometimes say. So for me, that is one general test which had two separate touches in a major impulse. That's your major impulse up and down. That was test 2, which actually had inside of it, fox's ears, 2 tests. We would argue that this even bigger first impulse didn't really end here. It ended right down here. And you've had sometimes in a big impulse, you get multiple impulses within it. And you can see it like this. There's a small 1. This could be a small 2 down to there. And that could be a small 3. But overall, this for us is one big impulse. We'll go Roman numeral 1, and we'll remind you that Greek 2 is the second one. Should do different colors. So that's your 2 overall, and this entirety down to the low here, the final low, is your 1. So we are in the process overall of making a broadening structure which has so far an up leg, which has given it even more to do from quite a deep low. Don't forget we got into the low 50s there. We warned that that 67 was a potential double top, remember? That target was made and overperformed to the downside. And that's when we started considering, could this get worse? But the support came in roughly as we were going. Well, that's looking pretty grim. And we got the reversion to strength here. Now we're an up move. So what is the expectation when you've had 3 impulses? We call these knocks. So this was also a fox's ears, a little bit further apart. That is 2 attempts, all part of impulse 1. So here's something we've learned in our observations with technical analysis. Sometimes when you see something happen in one part of the pattern, it's kind of in its DNA, it shows up somewhere else. It's a bit like I drew your blood, and your blood was shown to be clumping. Out of your shoulder, I drew the blood, and it was shown to be clumping. Or there was little pieces of trace elements of metal potentially, or parasites that might have been introduced by something, I don't know. You think. I'm not going to give you any ideas. Doesn't matter that I take some blood out of your backside instead of your shoulder, and I find the same thing out of the vein in your arm. It's quite likely that what exists within exists all the way through. So patterns don't always exactly adhere to this, but you often get similarity. For example, we've occasionally even spoken of the double-shouldered head and shoulder that does something like this, has a blow-off head. It often does an initial bounce, and then we'll have a secondary even here again, which is emulating what happened over there in the same way. And this happens too often not to go noticed. So we talk about complexity that is repeating in a pattern. So why am I telling you all of this? Well, we do a lot more deep dive learning along natures and discussion like this in things that we see as a contained pattern, which this broadening structure is indeed. And in that, we suspect, as one of our scenario casts, for example, that you will in fact test the capping descending line and potentially have some form of reversion back. We even have key levels through that as to how and where we might expect that. And you might get a second test. Then one of a few things happen. Remember, this is 1. That is 2. This would be Greek 3. Now, you'll remember from gold that actually you don't break on the 3rd. You have another reversion to the downside before breaking on the 4th. It's once, twice, 3 times. Then the lady. Woohoo! Didn't you see a bit of ladies? Special ladies in the recent opening ceremony. What does that tell you? Isn't it funny how that always shows up? Seems the same group of people always get that contract. Fascinating. Anyway, back to crypto. 3, 1, 2, 3 down. So what you could then get is a partial pullback. In gold's case, it didn't pull back very far this time, but it was a reasonable pullback before breaking the capping descending grind line. What does everybody want? We all want Bitcoin to break the pattern. If you're waiting for confirmation, like many traditional technical analysts, for example, Peter Brunt says Solana hasn't broken out, it's not officially a breakout, etc. And we'll cover our take on why we feel it is. By the time he gets it to a point, it moves to a point where he is satisfied it's a breakout, it's typically too late because your risk reward fundamentals get destroyed. Where do you put your stop? Where's your expansiveness to the reward side? Actually, it pays to be early. You take logical risk with the acceptance of loss by being on balance of probabilities trader, recognizing that there's no certainties about the future and you need to understand probability and risk, and you get patterns working on your favor so that you can enter in early with tight risk, quickly confirmed wrong, can be wrong quite a few times, and still make an extensive reward when you are proven accurate. So were we to get this, you could get the second degree sell-off that could come all the way to the midpoint, the splitter as we have it in our pattern, or it could do a bunch less. I'll remind you when we show you the gold. Gold was a tiny bit flatter. Gold had this lid on the 2000. It's okay for a broadening structure to have a flat top. The bottom was falling away, much like the Bitcoin bottom, which allows all the scared money at the bottoms to run out. But eventually it came back on this dip. It didn't do much of a dip. It then broke the 2K. We'll show you it again in a moment and set up a wind up on top of the roof of the capping descending grind line. But for many people, it wasn't a really significant move because it hadn't yet made a new high. That's the problem for the confirmation brigade. And that's the gift of a pattern. It allows you to get in early. You could, in fact, be getting in here on the reversal with a stop there. You're then straight into a wind up. You're adding positions here, and you've got a real melt up move in your favor long before you've even made the new high when everyone else comes rushing in. You see, you only sometimes, in the special cases, need to be marginally earlier than the streaming horde of momentum chasers. You want to be ahead of the streaming horde of momentum chasers. You want to exit ahead of the streaming horde of momentum chasers so that their liquidity is your fulfillment on the way back out. That means you have targets and you get easily filled. They all suddenly panic and stampede, and you see the crypto sentiment index go from 69 back down to 29 on a $10,000 or $12,000 correction that gets later shaken out. Okay, good. So those are a bunch of possibilities that we said. We mentioned the gold, and I mentioned that it was flat. Just worthwhile. Let's maybe split the screen, and you can see some of the similarity. The only problem I may have with this is that it sometimes won't allow you to have two different time frames. So the gold pattern, if we put it in there, interesting, it's on silver, delete, we'll go gold, GC1. Here's what I was going to show you. Problem is we've got it synced. Where do I, maybe if I hit it, use settlement as close on every day. Yeah. I think this is going to be a problem. I've got it synced and I'm not sure I want to unsync it because I don't know how. Tell me in the comments, educate me, your teacher of crypto markets. How do I stop it from synchronizing? They're two different time places. So I'm going to unsplit until you've told me to be wise and better. And I'll learn from you. I'll watch the comments for the people that'll show me. And I'm going to take it to the gold level. So here we go, gold level. Let's get it in. And let's remind you, not on a daily, more of a weekly or a 3-dayer. Yeah, a weekly is good. Let's stay with that. So here you had, it wasn't super flat. It's kind of descending as well. Here you had your 3 touches with your 4th being your moment. There's your break right there. Collectively, that's 1. Collectively, that's 2. And that was 3. Note the smallest pullback came after the 3rd touch in this instance, and I would expect similar for Bitcoin. Unlike Bitcoin, however, there was only a very half-assed attempt to get a second test at the second run here, and it didn't get anywhere near what the 2076 was. There was a key level of significance that was flat, that's your 2K, but that generally was your highest high. That was slightly lower, and this was lower still. And that was your capping descending grind line, and that was your wind-up structure. I wonder if Bitcoin isn't going to do something similar. Each time a rejection, actually the second time was pretty brutal. And yeah, we spoke about that. We said you've got a second time, you've got a downside, a third downside. You can see this didn't even make the splitter, so it's a very moderate pullback. We saw an inverted there. We even said be careful, you could make a bit of money on the tactical every short time frame trading gold to the short side. Boom, it did the dip, it shook it off, and it came. Even though we're macro bull, there was a short-term sell. Do you see that? You see what I did there? It's important to understand time frames of analysis for something, and that is the same similar structure, which is a broadening descending structure where the splitter is indicating a downward aggregation for which we expect upside continuation, and the early entries, in fact the confirmation that your early entries were good on that little sell-off, if you missed the dip and the rally here, is when you've broken the key level that is existing in there. We're going to talk about that for Bitcoin in a minute, and we'll go back there. We talk about that key level that runs through that, and then the subsequent wind up now as support, where you only traded below the 2K on a couple of little tests on wicks there, and then you got one of the best periods to be leveraged long in the golden medal. This is just pure upside, pure fast moving upside. It's significantly faster even than this bull market by gradient. You see that? How much time are you on risk versus how much juice? That angle right there, excuse me, is super steep. While even here, this was obviously a longer, bigger move by a whole in aggregate. In terms of the line of efficiency, which is this gradient. So let's go back to Bitcoin and look for that key level of significance that emulates that role that the 2000K level played for gold. Okay, we're comparing a fractal. It's not exactly identical. We talked about the fox's ears on Bitcoin, the two tests. There was quite a broad distance between them on the first in Bitcoin. There was a two test, and we're suggesting we're only here right now on the Bitcoin parable, which could mean something somewhat corrective over here. Remember the Bitcoin dominance. We've got that 58.5. Dominance can climb on crypto having a rest and coming back. Also, we've got to discuss the dollar. So let's go back to that Bitcoin chart and do some further analysis. BTC, USDT. Here he comes again. Okay, line off. So when you have a look at this level, what we've actually seen, and looking for where's the 2K gold equivalent on Bitcoin, it's quite interesting. Well, we have the same capping descending grind line. We had the same falling away lows that gave us the descending megaphone broadening structure to the downside. So where could the key level be? Well, one of the key things you should look at is what key levels of significance have we already observed that have just been run. Quite easy to see over here would be the 69,000, the 69,000. Now you see, there's a problem with 69,000. The reason that's there is it's the legacy high of roughly what happened in the previous bull market. We also have the 64,000, which was also a legacy high on the shoulder before it started to get highly volatile, just before the final run that gave you the 69,000. So the key, obvious, logical, round number that is talking to me, that is really, really, really standing out over here, that has probably just been run in the last two major instances. Remember, we're referring to these as one impulse and two impulse over here. When you look at it, quite easy, and it'll be interesting what you're thinking as a number right now as I speak. By the way, hit that like button if you're enjoying this. Is 70K for me. Key round number. Go with the zeros. So we got it on an 8 hour. I'm going to just try squeeze that in a little bit to at least half a day. The candles are a little bit dense. Let's wipe our face a little bit of all that. We could have even made it maybe the daily. Possibly that's better. Let's try it on the daily. Most people are on the daily. Let's expand it a bit. There you go. Now, what I'm going to do is I'm going to throw the 70K down right here on the chart, and then you can have a look at it. Always try something on. See if it fits. That's what technical analysis is about. When you're looking for key levels of significance that run through the price behavior that are potentially being respected by the market, just look how it fits. Now, when I look at that, that looks like a pretty good level, which is being broadly resisted, run but resisted, as the gold was at the 2K level. All part of one large impulse till it fell right down here. A second period of testing. It's easier also to understand why we divide by impulse, because here you have a testing zone of the 70K right here, and clearly there was another one there. You can see there were repeated attempts. Where's the low that came after the last period of tests? In here. So that, from here up to there and down there, is a first impulse. When did you start the next impulse? Well, after this low, because you tested again, you tested twice. Where's the next low? Easy to see. So you can see the broadening structures, impulses in this. And that's why we're not sure it's all over for the down legs here. 1, 2, and here we're going up. Where's the pain going to be most felt? Well, I think we're going to creep a little higher. You could see on the short time frames, we have smaller key levels of significance, and we're going to drop into that we've already drawn for you on here. One of which was the double top. We called it the fox's ears for you. It's an M top that ran the target with momentum to the downside, small rally, and then spill to the final low. We'll be showing you this on a lower time frame, but I have a feeling and or suspicion that we might just get very close to, if not running the 70, which if it comes in the next day or so, will also by definition now likely break the capping descending grind line. We can't move this line too much. There's some room for interpretation on the daily, but essentially it's wick trimming all the way across the first impulse, the second impulse, and it's somewhere here. So it's quite feasible we get a candle run of this and another rejection at the 70,000 of some form. Remember, the pullback on gold didn't even get down to the splitter. So that would be not the end of the world, because after that came the move that saw you treat 70K, the 2K of gold, as support and set up a winding structure. So again, those levels on Bitcoin, one more move that breaks the capping descending grind, some form of downside where the key levels we'll show you on a lower time frame might come into play, and who knows, maybe you get one lower and then a snapback, and what could happen is a nice juicy wind up with that 70K as support, and that is the setup for a really good run. Now, why should Bitcoin do anything like what gold did? My apologies. Why are we even talking about that? They're both anti-fiat. They're both anti the dollar, which is the king fiat, and they've both already done very similar things. So if it's already done quite a lot but is lagging, who do we expect to see move first? What have we always said to you? Long before all this price behavior, we said the ultimate anti-fiat and the god of God markets against fiat is gold. And it moves first. It moves first before silver and the other metals. And in the larger anti-fiat category, it moves first. It moves before Bitcoin. And we actually have a technical setup that is mimicking that which has happened on gold. And gold, having got a lot of central banker attention, might see Bitcoin get some attention, maybe from central bankers to a reduced degree, but maybe from other people that aren't central banks, that are more open to seeing the alternatives to the dollar in this environment and will choose Bitcoin. And that follows after they have recognized what's happened in the market and think, damn, gold's already moved, but Bitcoin should follow, and I'll trade Bitcoin. That could be high net worth individuals, retail crypto. It could be some funds that we've got our gold allocation. What else do we want to protect us against this? We're seeing problems in the debt market, the fiat market by association, which also means the banking market. The banking market is downstream. The debt and fiat market is the seesaw I've shown you before on other YouTubes that goes up and down inversely to each other. This is all in trouble, going to fail. Therefore, the intermediation system of it, that is downstream of it, that is the banks to the consumers for creating money, is inherently bankrupt if the top is rotten. In other words, the head of the fish is rotten, the body and the meat is rotten too. So it goes hand in hand. The holy troika of central banking, fiat and debt instruments as assets, combined with the intermediation that is proliferating it. If you're passing poison into the factories that are passing it back out to the people are poisoned too. So we go hand in hand. The downstream is always dirty if you're polluting upstream. So that whole troika is wrecked, and people first, the wisest and the highest and the top and the biggest money, want the physical gold. Second, the people that are more inclined are starting to see what's happening. So in order of wisdom and movement and scale, the waking up process is going. That is why it's possible that you could get similarities between what gold has done in its response on a dollar-based term. Remember, they are both charting dollar weakness, just with different market caps and different betas. That's it. That's a highly simplification statement, but I'm trying to get you to just understand where the thinking might come from. In short, we remain bullish Bitcoin. We just don't remain bullish Bitcoin dominant long term. So let's go back to the smaller time frames and do a little bit of micro analysis to make sense of what's gone on the smaller time frames. Okay, so very interesting spell. Oops, we don't want that blue line in there. Let's lose the blue line draw. Very interesting recovery. And we started to go up real firm. We ran into the 64 legacy high. We had a bunch of pullbacks there. We then ran up to the 67K. The 67K was the neckline of that double top that we've already covered here with you. Key level of significance. You broadened, you sold off. An ascending broaden, not continuation, a period of weakness, sell off, period of weakness respected, rebound, again, slower, grindier, getting a bit choppy, we're getting a little bit tired. And on the bigger time frame, strong, 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 up into here, bull pole, a broaden within a broaden. So you're getting choppy. Should have done this one in a different color. You're getting choppy now on a broaden. So what is this telling you? You've got a bull pole and you've got an ascending megaphone that points to more exhaustion. And what is our theory? You're in a macro descending megaphone that tells us that you're probably going to touch and respect the high line and then sell off. So it's actually saying to you, we expect you to come off after you maybe do a touch of the 70K and the capping descending grind line, the red line, which is exactly what I was saying to you on the bigger time frame. So the smaller time frame is also showing a little bit of gassing out. There's not going to be any easy mega upside right away. That's what you're being told. That's what technically is being suggested on a probability basis, not guaranteed. It has and can happen that if you have a super bullish moment, even on a broadening structure that is ascending, you can melt out the top, but it is not a high probability outcome. Typical probability outcomes are there's a little bit of tiring going on, a bit more choppiness. As you can see, it's not slow, 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 slow surge. That's the good bit that you really love to be in after a bit of bottoming. This is more choppy. Okay, so we've drawn it for you, we've made it clear. That was also clear, by the way, as a continuation structure. See how you stopped going down after your target and it attempted a rally, and the rally told you we ain't good. We got resisted at your 63. That's the only level. One of very few people that have the 63K number drawn on. Go visit all our other histories as to why that is. Again, necklines in the light blue, but you had a real spill and you got a follow through spill to the downside. So the small time frame can indeed be useful. We just don't make long-term calls based on small time frame setups. Small time frame setups give you the potential for the next move. So you made marginally higher highs a couple of times here. You might give it one more go. And then, whether you make the top of this broadening structure again or not, if you fail down, we could have something a little bit more like a pullback going in for Bitcoin against the rest. How does that sit with the Bitcoin dominance? Bitcoin gains dominance when everything is going down. Doesn't have to be terrible down, by the way. This isn't a big bear shout. Everybody just thinks so binary. We can just pull back in and have a moderate pullback as part and parcel of what we've already described on a bigger time frame of something that is bullish. But you've just surged from the bottom of a broadening structure, almost right across it, and we're getting close to almost finishing what we probability scenario cast inside our community quite some time ago. So it keeps acting like it wants to deliver it and tiring like it's getting close to the end of its run. So on balance of probabilities, it's not a whale into crypto moment. Even though Bitcoin can go slightly higher, we'd expect if it runs the 70K level, and that would mean it's past our capping descent line that has a slight descent on it and is getting lower on an ongoing basis the longer it takes, that you will have some degree of rejection. Now, if it turns very demand destroying event on the economy, you could have a huge one and maybe go all the way down to the bottom. Not my primary call. Gold potential is probably one of my favorites that I'm sitting on right now. Somewhat of a pullback. The splitter is down at 60K somewhere here. There's quite a few key levels. This is turning into an interesting level over here. You saw the bear flag die over there after being plumbed right through. You saw the target for the double top. That's the second half of the double top. The other fox's ear is to the left. This is what we're looking at. So Bitcoin is not a raging bull going into the new week. However, it can go somewhat higher, marginally, but I would expect resistance. I don't expect it to moonshoot out of here. I'm not even sure it will take the previous highs, but I would be cautious, and I still wouldn't whale in even if it was there or thereabouts. However, after any pullback, should it show any sign of reversal patterns inside this broadening structure, it could become a powerful signal for a very early entry that puts you on the opposite side of the thinking spectrum of, say, someone like Peter Brunt that waits for confirmation or doesn't think certain things are in breakouts. And that could just be a time frame difference. It's not a bad. There's many ways, by the way, for people to make money. So it's not disrespecting somebody else's trading style. They have their own ways. Good on them. But the run up here, I would expect a pullback, and limit orders are your friend. You may not even get as deep as the splitter. We've got a number of key levels that could be potential opportunities around 62, around 63, around 64 itself, and it could even be smaller. It depends a little bit on what the dollar might do as well. So the dollar, as you've probably heard, has been rather weak. It did do the first quarter of the year rather well. And this is what you were facing. You had, where's January? Let's just go and show you how the dollar's performed since the beginning of the year. And it's been broadly stronger. You started the year at a relative low for the dollar, by the way, and it had had a capitulation. Wow, over here. I think the low was 100.5. So we failed to follow through to break the 100 for a second time. We got this reversal that was called. You broke it up to there. You got a good run. You got a pullback. You then traded consistently up, but you're in a broadening structure trumpet that meant that you're likely to fail out. You failed out. You continued down. But that was a broadening to the downside, which meant you were probably going to break out to the upside next time you broke out. You squeezed into a rising wedge, which implies you're going to break back down. So you can see we've been tracing this ups, downs, all the way through, break down, return, move, spill, 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 back at this key level. This is such an interesting key level. This target, by the way, of this little structure over here has played very interesting role, much longer than I thought it would. There's your neckline, 102.5. There's your target for that performance. And you can see how we've been resisted, failed to go further, came all the way back down, bounce, resisted, took a massive squeezing and falling wedge to actually get away from, couldn't stay away, coming back down, bounced off it, coming back down, bounced off it, coming back down, broken with momentum, little double bottom, back up, whoops, got up top here, down, bounced off it, came hard through, came back up, resisted off it, sold off, came back up, resisted, came back up, resisted, and you can see that we are currently in a state of being resisted at this target level. This is a very interesting target level. Nobody else has this level. Nobody else has the draws we have as a key level of significance, but you can see how we are wrestling with the general pivoting around the 104.3, 104.4s, which was the target of this bottom reversal that we gave. Okay, so that's kind of the dollar. It could spill back down and support here again. This is also an interesting level. It supported there, it broadened there, it supported there, it supported there. So it's also an interesting level. We could test down again before coming back up. That could then be a double bottom. You might get a bit of dollar strength. It depends how the data runs, but this is an interesting pivot inflection point, and we're very, very close to it. So it will either smash it with momentum, come back, support, and go further up, or it will be resisted again and go down. Right now, on a small time frame, I'm not even too sure I could tell you which one it'll do. We can have a look at that on the smaller time frame, but there is an element of calming because you've sold off particularly hard given everything that's happened. Yeah, it seems to have been a little bit in the zone, very much caught between the 104.2 and the 104.5. It's very tidy and tight. A spill or a bump either way, but it seems comfortable, nuzzled just under the 104.4s most of the time. So we'll see how this pans out. You can set for yourself a couple of alerts just to see which direction it might pivot. Now, given what we've said about Bitcoin going back up to the high side, it would be ideal if this triggered these alerts that are a tiny bit lower and had a little dip, because that could see Bitcoin get just enough, tiring Bitcoin, a little bit of puff to take it to achieve its final vantage point, whereafter the dollar maybe becomes more assertive again for a spell. So if we were to do that, that could give Bitcoin its up and over it needs to finish the 70k resistance, which meets with our scenario. And a fairly benign dollar. For understanding what the dollar might do, you might want to check Forex Factory, for example, and check it out. Filter for the USD. Consumer confidence is going to be on Tuesday, so that could be an interesting day. And JOLTS, job openings. Don't forget, we'll be doing a live trading day for that Friday when the non-farm employment change comes in. That's right. That could be very significant for both traditional markets, the dollar movement, and the crypto markets. Okay, but Tuesday you will already be getting consumer confidence and JOLTS related data. Consumer confidence, Tuesday and Wednesday, quite dense. The ADP is a payroll company that gives a virtual proxy, a kind of proxy of what could be expected for non-farm, given that they serve many businesses for payrolls. Okay, so back to the charts. That was a little bit on Bitcoin deep dive, what I think will go, why I think the dollar is dovetailing to make possible some of those scenarios that we've painted. Remember, we point forward with scenarios, and when they cease to be playing out, we reject them and replace them with alternative scenarios. So the market will tell you who it is. If it's slithering on the ground in an S shape, it's a serpent. If it's standing up and trotting off into the distance, it's probably a horse. Okay, so let's have a little look at Solana, because we spoke to you about Solana and said Solana of the alts is likely to overperform relatively. So Solana's done pretty well since we made that call, by the way. It's gone up. We were getting in quite comfortably in and around the 150s, and now it's around 184. So it's close to local highs. That's a 2 hour. Let's get a bit more context on that. So this is why certain people will not yet have it. By the way, there's a couple of multi-patterns in here. We, of course, have gone for a flat-bottomed upside HVF here, which has a funnel over here, a high, a break and entry there, and a stop line over here. You also have, and we covered this, you had little W's at each of your lows. You kind of had a falling wedge there. So we're doing some micro analysis. You've got the same here. You see that DNA? Hey, you did a W bottom and the one low, and guess what? You ended up doing a W bottom at the next. See what I was saying? Clumpy blood taken from here, clumpy blood down there, same anatomy, similar things. DNA is similar because you're injecting from the same, you're extracting from the same body. Break up, down, up. Not yet made for me, this double top target. So I think it can squeeze a bit higher. Do you see how that dovetails with Bitcoin squeezing a tiny bit higher and dollar maybe a little Sunday session? We're a Sunday today. This will probably go out for many of you. It'll be Monday. How this could just give you that little push through, and then you could have some degree of relapse. Does everyone get that? Are you good with that? Can you see how it happens that way? Yes, potentially. Don't forget, we're also highlighting you've been rejected at the 188.89. You were in the 188.4. So there's a bit of a blue line here, the 18134. That came from, you guessed it, it's a neckline from last bull market 2021 performance on Sol. And it's coming straight through again. So I'm quite happy to use it again. We got that little shoulder and rejection there. You're getting a bigger sell-off here. You're coming up here. You're getting a bigger. So let's use the other color now. So we're talking about a bigger, more macro look at this. This is all just there and all just here. And bam, and you're getting that little shoulder again. Well, that is giving you another bullish pattern for a reversal. Now, we have two methods of looking at that from a targeting perspective, but if I just pull this down, the one I'm looking at is suggesting 282. 282 for that W bottom. Let's make some space again. There it is. Tiny shoulder. We actually had the tiny shoulder there. I didn't draw it in. And there's that neckline that came from long ago, key level of significance, 282. 282, not far away from 300. That's kind of interesting. It is kind of interesting, isn't it? Yep. So this W bottom, the smaller one, little bit more and then a rest. Pop. And then a pullback, maybe a deeper right shoulder. And then we could go. If we run 282, is there a chance of a 300? That would be a new high, by the way. That would be a new high. And that's super interesting. By the way, on Solana, we get something that comes up every now and then. And generally, we don't go into explaining ourselves more than we have to. But there's also popular, when people repeat something often enough in the comments section, it seems like it becomes a truth for everybody else who's watching it, if it goes unchallenged. And that becomes a bit of a problem for somebody who is not being reflected accurately. So I want to fix a few, let's call it falsehoods about our performance with Solana. So we put out a YouTube, and everyone would go, did you say Solana would run $3? Short answer, yes, we suggested there is a possibility Solana could run $3 during the bear market. And here's how our Solana performance has been from the previous cycle into where we are today. So I'm going to put these on. This has all our legacy draws. And I'm going to show and remind everybody a little bit about Solana. And I'm also going to remind everybody a little bit about what it is we do, because it's only through lack of understanding that, look, I'm aware some of the people in the comments are the lowest common denominator. The silent watchers are often the intelligent ones, and some of the people in the comments are really sincere and interesting, and I learn a lot from you when you do that. So thank you for commenting. If you're going to show up and say, you're all wrong, you have no credibility, Solana never ran $3, let's cover our coverage for you. That is all on YouTube, the bad and the good calls on YouTube that you can see and watch again. And if you want to research this, you're welcome. This was an upside HVF. We called it and we traded Solana long. We said it's a macro bull. This is in a log scale chart, by the way. You should hold at least part of your position for the upside. It made its target and it continued substantially higher. During this period, Bitcoin was actually in a falling wedge. That was post the 64 high, I think it was, and you were about to make your 69K run, but you actually fell from the 64 to 29. So Bitcoin was doing something like that. Lower lows, lower highs, but eventually it did squeeze enough that it was doing the wedge to set that up. During that period, Solana did something slightly different. It gave you the ugliest upside HVF, but it failed to go lower on each cycle. In other words, it was showing support. It was showing support on our legacy targets and a smaller funnel that had a wind up, by the way, that also made a higher target. All of these key levels were being supported. This was showing us relative strength. We said during that falling wedge, once Bitcoin, if it does break to the upside from its 29 pullback low, during this period, you should opt to trade Solana long for a major overperformance. It's shown huge relative strength. So this is all way back in Solana's history. And we traded that long, and it was a major outperformer. When everyone else was actually quite concerned, people became quite bearish during the 29K fall from the 64K lows. Many people forget that, and actually to hold and say you accumulate at 69 is awesome. The move that followed was vast. We didn't wait for the traditional break, which is marked there. We took it immediately on that smaller time frame, which I'm not going to drop to, but you can see a squeeze that was breaking the key level of $30, and we ran it all the way up. We didn't sell out meaningfully. We always suggest taking small amounts off when you have key targets run. We called another HVF up long there. We didn't sell out there, and we blew into that left shoulder high. That left shoulder high turned into an upside HVF for Solana, where we once again asserted long, and a community member from his trading, never mind me, I'm not talking about what I made money and things like that. I prefer to use third parties, actually made well past $500,000 USD and sold the high. Let's talk in third person. Sold the high, told us it was awesome, and he got out and he was happy, and he had a substantial sum to his name through the bull market trading of Solana. Those were our long calls. We were consistently long, and we highlighted its overperformance. Why am I making such a fuss of some history? Because of the people that'll show up and say, you said Solana $3. Yes, we did. We said a lot of things about Solana, but you seem to only remember one. That was literally the high of Solana. That exit was the high of Solana. There was a smaller head and shoulder here, over there, with that neckline, with all these targets. We called Solana's going to fall. You don't want to be long anymore. 102. We called 91. This is real reversal taking place. We called head and shoulders nestled, smaller, eventually getting bigger. We called this bigger head and shoulder with an HVF funnel neckline that you can learn how to do all the way down. You guessed it, down, down, down. All these targets were being met, including the 69 over there. My apologies, the 59 over, is it 69? It's 59. Right down over there, that happened. We pointed out the rising wedge. You got a fake rally. Bear, bear, bear. All the bear targets after calling essentially the top of the Solana bull market. We got all the bear targets down, down, down. Every single one of them. And this was now a bearish season, of course, for crypto. We had a winding up. So let's just cover this and put this one to bed. We had a winding up here with a grind line. We called this a short and said it's going to go lower still. This is now down at the $30 mark. It spilt and fell further. Eventually it made an even larger head and shoulder that we drew right here, where the original all the way back relative strength upside HVF, even though it was ugly as sin, and the neckline we selected for it, which came out of its axis, gave us a $3.52 downside target. We said this should be a sell, stay out. So having given the high of 259 and nothing but repeated sells, not buying the rally, short technical patterns, expecting there was a possibility of a bounce there, but not buying the rally, major spills, major shorts, right down to 30 from all the way up at 259. We had given nothing but short guidance, and every target but one was not met of 352. And let's also highlight, whilst you are there on this history, regular scale of this entire bull and bear market period. So the people that continue to say you called Solana $3, I absolutely tell you, we 100% did, and absolutely no one's denying it. And so what? And so what? It fell from 259 that we provided the final high, and we gave nothing but short signals with successions of downside targets, and that's how trend trading works. You trade continuation until one pattern fails, and that failure is information that the weakness is no longer there and a possible trend change may in time take effect. In short, you trade long and you keep trading long on every setup all the way through the setups. You turn when you're either wrong or you get a head and shoulder. We didn't get to be wrong on the upside. We saw the head and shoulder. We also saw what was happening on Bitcoin. But we got to be wrong once, which is very low and typical of end of trend. And that's what happened. So because Solana actually traded as low as $8 from $259, certain people are furious with us that it only went to $8, not $3.50, and that we got that wrong. So in short, having been given nothing but short guidance, called the top on this token, all the way down, all the way down. Some guy's mad because of that on a non-log scale. We saved you that, but he's mad about that. Real mad. And he'll show up and he'll keep writing it, and he'll write it again after this video, and you'll know what to tell him. But that is what YouTube, lowest common denominator, Twitter is about. We will absolutely be wrong on downside predictions and upside predictions when all trends change. And we'll be wrong for other reasons too. In fact, this is a fairly exemplary record of bullish trading all the way up with key biases, unbelievable top target call. In fact, I don't think I will reproduce this level of calls through a cycle, both long and short. The amount of people that were coming in long here, the amount of people that were getting this wrong, the amount of we get subjected to certain scrutiny that others will never face. This was a downside grind line break. It's difficult to have targets. We had the head and shoulder over here, and that's what we hung our hat on until it fails. And you keep tracing the nestled ever larger. We have the monarch head and shoulder in gray. We had the red one. We then had this huge one, which could have been the end of it all for crypto to go even lower. And it went to 8 instead of 3 from 260. And that, my friends, is about losing it lost about 97.5% instead of losing 97%. And people are furious. So that's human nature. So just bear that in mind when you see the comments and the damnedest fact about giving your best about what the future is likely to hold that you don't know yourself, using technical analysis and recognizing that you trade continuation of the major trend until you fail. And in most instances, you will have to fail to get that feedback that, hey, it ain't going down anymore. And by the way, in case you want to see that price behavior, when it hit $8 instead of 3 from 260, so $3.50, it missed a target by five, not even $5, $4.50 falling from 260, and hit all the other ones on the way down. And then if you thought you should have been long, it went sideways for an extended period. Here's your daily chart at the 20s going sideways before we had clear indication of the bull market starting. We are now telling you that it is the outperformer at the moment, and we're back on the bull bias. So a little bit of history. Every time we cover Solana, we seem to get the peanut gallery out. Now you know where it comes from. And more important for the smart people watching that do comment as well, is there's a point where you will be wrong in every continuation strategy on big time frames. And actually this on average is better than average. What we've just described is significantly better of average, and all the original patterns are drawn, and all those same YouTubes are up there, including the one where we say we expect it to go to $3.52. Okay, so what's to happen? A little bit up, maybe a little bit push through. You've got a 200 key level that was rejected here. I feel this 180 is, as a W level, is a little bit of an interesting level, a little bit of a push deeper into it. You got rejected at 188 and then a slip back. I feel this 181, we can slip back a tiny bit on Bitcoin. What about Solana versus Bitcoin? Which should you be in, or should you be in both? Well, you could indeed be in both. So a reminder of how that one's performed since we gave it to you, and it is currently having a little bit of a rest. So it just ran its first interim, so now you're getting choppiness and sustain. This, by the way, beautiful little squeezy with a very upside bias. It was almost a primer, which is a small HVF fractal in the funnel. We watch for primers and fractals on lower time frames in our funnels of setups. But what you often get is, because there's so much buying pressure, it squeezes higher, and instead of having a horizontal, it has a rising wedge splitter instead of an axis, which is flat. And you get tiny bits of bleed outs through the top until the pressure is released and poof, and you're through your first interim. Everyone else chases in, they ride the chop. A little bit of shooting star, you're going to ride the chop. You could even get a return move back down to here if Bitcoin goes and Solana not so much, and come back to the funnel. But our expectation of performance against Bitcoin is that in due course it goes higher against Bitcoin in relative valuation. There, 0.0037 of a Bitcoin, where the stop was at 0.0021. That's quite substantial. So I think 21 to 37, and it's 37.8, so it's 38. It's 22 to 38. Yeah, the stop loss. Forget the zeros, don't get lost in the numbers. 22 to 38 percentage 16 out of 22. That is quite high. That's like 8 out of 10 if you divide them out. 8 out of 11. It's almost, it's almost 80% in gain. That's 16 that you're picking up from 22 to 38. So it's quite a substantial relative price performance gain. Now you could pull back. This would be a great re-entry point if we get down to the 25 level. See that 24.9. And another point where you're likely to rest is here at our second interim around the 32. So it's actually quite clean. It's 22 as a stop. It's 25 as an entry. It's 32 where you may pause and get a pullback along the way of going there. And when it is done with its overperformance, I wouldn't sell it all out, by the way. I'd do a partial close. It's at 38. There you go. 22, 25, 32, 38. Simple numbers, overperformance, and it is delivering since our video release. Although the guy that will come and leave the comment, Solana, you said Solana will go $3, $3.52. Will probably not acknowledge that this is moving in the correct direction. So this is an outperformance to Bitcoin. Okay, great. Let's just go back to that Bitcoin dominance and say, you also said Bitcoin dominance to go down. On the big time frame, indeed we did. You can see it trading up, and we've just told you we can see a 58 in it. 58 and a half, actually. So this has moved now. No, not you. There. So 58 and a half overall Bitcoin dominance, and that could, as I say, see you possibly even get a little bit of, you don't stop on the target line. Targets should be run, not dot specific. So that could point to some decent overperformance. You're seeing it here as well. So this tells you the likes of the rest of crypto generally is dull. Generally is looking dull. Pretty dull. Apart from one or two that are likely to overperform Bitcoin, which we've already indicated. Solana is one. Okay, it's quite a lot for you to digest. There's a lot more that we're working on. Got some exciting developments. So some people ask about something like XRP, for example. So many of you will realize that these things take time. They can move and then they can pause. By the way, I'd expect this also to roll over. So everybody loves an XRP update, etc., etc. But these things can indeed take some time. So what do we say to you? Well, how am I trading it? I don't want to have locked up in XRP going sideways for a long time, especially if you use a tiny bit of leverage and all of this. This just causes cost and clocks up and nibbles at, let's say you've got Bitcoin as collateral or whatever. You're just watching your collateral go down. You're basically paying an extractor bank lender, because that's what these exchanges are, if you trade leverage, to hold long-term positions that are not even yet going your way. And that's a poor position to be in. So I've actually accepted a certain amount of risk. I've accepted how much I'm to allocate. Let's say you say, I'm not prepared to lose more than 10 grand on this. You could get, for example, structured product, which is a 10 grand call option with, say, a year and a half, and say, my strike price is at the second interim on this, and everything that XRP performs above that is going to be overperformance. You can get a structured product and join with us in a, that's my loss. You can't lose more than 10 grand when you buy options. At the end of the 18 months, it's all gone. If it hasn't moved, it's lost. So there's a time value in that. This is how I prefer to trade things that I have little control on the timing about. From the SEC, when the alt run will continue. You could give 18 months would, for example, cover you for the alt bull market of this cycle. It will not cover you if it doesn't get through to your strike level until the next alt cycle, which is 4 years away. It's not. You'll lose your whole 10 grand that you bought. Options expire worthless if you are out the money. They expire with intrinsic value if you're in the money. So for example, if you say, okay, I'll do $4, let's put it back on log scale, so it implies a fair old move from here. I'll do $4 and everything above that is just super gravy for me. Here's how it would look. We put the draw tool on for you. We say, okay, great, that's the low. We say there's the 19.35. We did this again with Varndale and the Black Swan guys. Great guys. Check out their recording when it comes out. Boom, boom, bosh. You're at, where are you now? You're at 60 cents, $19, big target. You can say, oh, but the first interim's around $4.40. Oh, I'll have a strike at $4. If we get just to the second interim in this alt run cycle, everything above $4 that it goes up is pure gravy. Okay, that's an example of how you might. That's not me telling you you should do anything. It's not me selling you anything. You want to know what I do? That's something I can do. If you'd like to know more about that and maybe consider doing it yourself, think about it first. Everything you sign up for, once an option expires, if it's out the money, it's worthless. For most people, for many people who don't know what they're doing, you'll have a high percentage of options that expire worthless. They are like a lottery ticket in terms of you get your timing right, you get the major move. But if you do get it right, you can make 30, 40 times. And there are some additional details I'm not going to get into, like locking in some of that profit, like selling. If you bought calls with a strike there, you could sell calls higher up so that you lock in a certain minimum of gain, but you get some of your money back that you spent on the buying of the calls by selling some higher up. So there's details that I wouldn't get into, but many ways to unlock the benefits of these kind of situations. If the Bitcoin dominance is going to come to a slowdown, let's turn it upside down and show you what I showed you previously. So here's the draw that we showed you previously, showing you super low volatility. It's been a very calming, inching downwards, whilst you had quite robust up legs. This is what I keep making the point of. When you do get those surges, and remember, this is the applications that they will run the new system of. They need things that can apply and manage the new system for the old system that has to be replaced. So for me, these things have to happen for the reset that they want. And Bitcoin is not going to be the interface for all these things running. On the same way, you're not using iPhone 1s because it's quite clear the first instance of something is the supreme quality product that ends all and no further innovation or technology could ever be entered into. So we're all on iPhone 1s or Nokia 1s, God forbid, as well. So this tiny little structure, we said, remember, you may get one more capitulation out the bottom before you come out to break. That is our overall view. By the way, I've drawn it so that it's broken down through there, out the bottom of the wedge, but then I would expect a pretty violent move quite firmly, at least approaching the 40% of dominance for Bitcoin. Reduction, remember, inverted chart, dominance going down, big moves by alts, and you can't have them all on. And which one will run first? The wealth will be built. Why would you listen to me? Why would you consider booking and securing a self-study with us and getting our updates on the weekend on our self-study program for very low prices, with a payment schedule, a number of things that can help you understand. You would also be getting our live trading days for free, by the way, and you will be getting the weekend sessions for free. I did the previous last weekend session. We've got great top guns that are continuing to do the assessment and HVF method well understood, presented, utilizing our analysis of the markets. If you were to get this upward leg, this will point to a substantial move. My assessment in the reducing Bitcoin dominance, However, my assessment is you will still get some form of pullback potentially. You could continue to move and have very small third drawdown, but I would guess a little more. I don't think it survives. This pullback is like a bear market in a normal bear market. I think it's far shorter. You could have a Bitcoin surge at the, halfway through the alt market that pulls it back. And this could all happen in this bull market. I don't know, but I'm not suggesting that it will. You could have this pullback, could get extended. You could go sideways for a long time. That could draw things out before you get the super leg. But this near-term up move, I don't think is too far away. We've had that push down, and I think this part of the leg that's going to take Bitcoin's dominance down to the 40s again, the low 40s, and maybe even below 40 is not too far off, and that is going to represent a very unique time. But certain alts are going to move first and further, and maximizing this is going to ensure you weather the storm well on whatever pullback we subsequently get. And that is why we suggested you're getting low volatility. One of these days, this capping descending line is broken. You're having a swing to the other way, and my assessment is I don't think that goes on for too much longer. So that is why we started this video. Why is Bitcoin dominance going up? Okay, hope this has been useful for you. What do you do with your trading in more specific terms outside of our bias to Solana? First of all, this is an entirely non-advisory channel. We are not regulated. We don't seek to be regulated. We're not telling anyone what to do. We're discussing in detail how we view the market and what we do. And people own their own outcomes on that. Should you wish to talk further with us, feel free to hit that first link below. Book yourself a call. There may be small possibilities in the not too distant futures. TMPs will become available again in small number only. That's not the case right now. The self-study is awesome. It's low cost. It has payment options. As with everything with us, there's a 14 days money back to anyone anywhere in the world. It's the longest consumer, no question refund cycle. People don't ask, but we have had 1 or 2 instances. It's no questions. It's straight back. That's with a lot of content front loaded in the program, by the way. That's why we don't make it any longer. And yeah, you will learn a lot. Plus you'll get interaction every weekend, and you'll get the live trading days included with me as well. And you'll get every weekend a different voice, typically, or different people to me, and the odd occasion with me as well, going through the markets, what we actually think about how things are going. Okay, thank you for watching. Quite a lengthy one. Look forward to catching up with you. Interesting times. And overall, that alt dominance period, not too far off, but not yet. Got a little bit more to squeeze out the tin, scraping the bottom of that jar with Bitcoin dominance, going that little squeezing higher and turning that screw a little tighter till we've done that 58.5 and a little bit of maybe a potential piece of stab through over performance before we start to get into that reversal. But when it comes, be on it quick and know which tokens you want to engage. There's a couple of tokens we haven't mentioned that are real interesting to us that we've been discussing this weekend as well, that might have a higher multiplier than Sol, but are not quite as big cap. Okay, we talk to you later. Thanks for watching. And don't forget, shares and likes help us a lot with fooling the algorithm. We love it. Thank you. Bye for now.